Hey guys, hope everybody's doing well today. We're taking a look at SPHD. Yes, another update on SPHD. They have updated the portfolio sometime in January. I'm not exactly sure when. I can't seem to find reports of when they rebalance. I know they rebalance in January and June, I believe, but I can't seem to find what they did and why they did it. Even on the S&P Global website, I can't find a report on how they rebalanced and whatnot. So if any of you guys know of a spot where SPHD or the S&P Global issues reports about, how they rebalanced it, let me know down in the comments. I would really appreciate that. But I looked back as my last SPHD video. If you missed it, I'll link it up down here and down below. I noticed that there were some changes, so we're going to just update it, take a look at it, and we'll see if this popular ETF is a buy. So if you're new here, please like, share, subscribe, do all that good stuff. Down in the pinned comment down below are all my affiliate links, Amazon, Teespring, M1 Finance. If you do M1 Finance, you get $30 through the end of this month and next month, I believe. Deposit $100, you get $30 in free cash, and if you use that link, I'll get $30 too. So win-win. That'd be awesome. So thank you guys for subscribing, watching, sharing. Views have been really horrible lately, especially in January. I don't know what's going on, but seems like I'm getting subscribers, but the views have just went down the tube. So if you could share these videos, I would appreciate it. So what are we looking at today? We are looking at, of course, SPHD, ticker SPHD, and it's the Invesco S&P 500 high dividend, low volatility ETF. Now, a lot of people get confused and think this ETF is based on the S&P 500 because it has S&P 500 in its name, and it's not. The portfolio is constructed of S&P 500 companies, but it's not based on the S&P 500. So the index only has about 50 names, 49 to 50 names in the index that this ETF tracks. And they're all from the S&P, but you definitely don't have all 500 in here. Now, just real quick, I think they've changed because now they're calling this a mid-cap value ETF, and it used to be if I remember correctly, a large cap value ETF. But they definitely, we'll look through here, definitely has gone down into more of the mid-cap space. And we'll look here, we got $2.54 billion in assets. We got just under a 5% dividend yield, which isn't bad. I looked back at my last video, which was in September, I believe, and we were trading at $33, and now we're at 39. Not bad, but definitely not participating in the market per se. Net expense ratio of 0.30. You're paying for the accounting that you get because this is a monthly dividend payer, so that's where that expense ratio comes from. Any monthly paying ETF is going to have a higher expense ratio. FactSet has gave this a D rating as far as an ETF is concerned, and Morningstar rates it a 2-star fund. Now we'll take a quick look at it. Like you see here, back in September it was trading around 33 and now it's 39. Really hasn't participated in the run-up that we've had here recently. We'll take a look real quick at the portfolio composition, and I'm gonna look, actually we're gonna move on from that because Fidelity has this, as you can see, as of December 30th, and I wanted to get straight to Invesco's website because they update theirs daily. So I'm recording this on January 15th, and we'll look at the portfolio. Like I said, if you haven't seen last video, I went over the whole portfolio, and we'll look at what today's portfolio looks like. So it looks like, we look at this slide right here, we have 16% in utilities, so they're really getting into trying to get into stable companies. This one I like. Okay, information technologies at 13.7%. Now, you're not going to have any of the high-flying technology companies in here, but it's nice to see some technology in here, because this used to be almost non-existent in a dividend ETF. Materials has jumped up to 13.25, real estate 13.2, communication services 11.2, consumer staples 8.3, energy 7.5. It's a little high. Financials at 6%. I think they cut down on financials, which is too bad, because financials had quite a bit of a run here in January. Consumer discretionary 4.8, healthcare 4.5, industrials 1.3, and that's an interesting sector. Investment companies 0.02%. I wonder if that's Invesco. Let's check it out. But we'll look at the market cap real quick. We got large cap value at 20, basically 29% of the fund. Large cap blend, I don't know why they do that, 10.45%. And then you look at mid cap and mid cap blend here, almost 50, basically 54% of the fund is in mid cap. And then small cap, you have, what is that, 6.5, 7%. But if we look at the yield, you know, right under about 4.5 to 5%, and it's a monthly pair. Look at the fund characteristics. This is a nice thing, but this is only as of 12/31. Price to earnings ratio of just under 16. That's pretty good. I think the S&P is in the low to mid 20s. Forward price to earnings 14. This is nice to see a lower number than the current. That just means you're expected to have higher earnings in the forward 12 months. Excuse me. So average market cap 51 million. Wait, is that right? I think that's wrong. 51 billion? I'm not good in millions, you know. I'm only planning to be a quarter millionaire, so I'm not good with these big numbers. So let's take a look. Let's take a look at the let's look at all the holdings. Why don't we? Let me see if I can zoom in on this a little bit. There we go. We'll group it by sector, and we'll look at the utilities. 15.88% of the fund, and you got PPO Corporation at 2.39% of the fund. Duke Energy, Southern Company, Edison, Exelon, First Energy, Dominion, Pinnacle West Capital. Is that a utility company? That seems weird. Consolidated Edison and Entergy. So there's some pretty stable companies in here, given this fund. Definitely a dividend boost. Utilities are known for their income, but not for their growth. So good companies in there. Now, the one I was excited about, information technology, having 13.73%. You got Seagate Technology. Like I said, these aren't going to be high-flying tech names, but definitely nice to see technology in here. NetApp, Hewlett Packard Enterprises, Broadcom, which is a nice dividend growth company right there. Hewlett Packard Inc., the Hewlett Packard Enterprise and Inc. One is the printer side, and one is the big enterprise computer side, I believe. Of course, you have IBM. Got to have IBM in a value fund, and Western Union. Now, people think of that as financial. It's kind of like financial tech is pretty much what Western Union would fall under. Materials comes up to 13.25% of the fund, and you got some familiar names in Dow, International Paper, CF Industries, Eastman Chemical, which I like, Nucor, I believe, is a steel maker, and Amcor PLC. Next up is real estate with 13.2%. Got Iron Mountain, the data REIT there. Vornado Realty Trust, Health Peak Properties, Regency Centers, Federal Realty Investment Trust, which is a nice REIT right there. I think it's a Dividend King, I do believe. And then O Realty, which is a nice one as well, monthly payer. So good mix of real estate there. Communication services, CenturyLink, international group of companies, AT&T, Omnicom, and Verizon. So good yield here in these, not a lot of growth again. Consumer staples, obviously I thought we would have Altria Group and Philip Morris, the tobacco companies, higher yielding companies, not a ton of growth, but Walgreens Boots, another value play in there. That could fall under healthcare as well. Kraft Heinz, another ketchup maker that Warren Buffett owns, so good mix of consumer staples there. Energy, you got ExxonMobil, Kinder Morgan, and Chevron. If I were to own energy, I'd probably own those three, to be honest with you. Financials, a couple of regional banks, Huntington Bank shares and People's United Financial, both great companies, or they're good value companies, pay a strong dividend, those two. Consumer discretionary, Newell Brands and Hanes Brands. Newell Brands is I believe a Rubbermaid company, along with a bunch of other brands, and Hanes Brands, of course, is clothing. Apparel is a little tough right now, but good old companies right here. Healthcare, we got AbbVie, nice strong company. Pfizer, another nice strong company, and Cardinal Health. So pretty strong on the healthcare side. Industrials, you got 3M. 3M is considered a value company now. That's nice. And then investment companies, STIT, government and agency portfolio. That's weird. That's like a mutual fund. That might be just where they're holding cash. That's my guess. So overall, the portfolio is nice. Is it going to participate in the run-up that we've experienced, like the S&P? No, probably not. If we look at the performance of SPHD, it actually ran well with the S&P 500. It actually went above it in 2016 to 2018, but it's kind of lost steam, and I don't know why. It'd be interesting to know why. The March shutdowns last year really took a hammer to SPHD, and it really hasn't participated. The S&P 500 has taken off. The S&P 500 is this darker blue line. It's just left SPHD in the dust. So is SPHD a buy? I like it, but I would not replace it. I would not have it as a core holding. If you're going to have a small portion of SPHD to generate that 4 to 5% yield, that's fine. But if you own SPHD as a core holding, this right here that you see, the dark blue line, this is what you're missing out on. That's what you're sacrificing to get that monthly dividend, is this right here. So hold VOO as a core holding, or VTI. There's others, of course. I'm just generalizing. And maybe SPHD as a small satellite holding to generate some additional income. So that's my feedback. Give me your comments down below. Like, share, subscribe, do all that good stuff. Appreciate all of you, and hope you have a great weekend. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.